All right, everybody, this is John, and welcome to the free video. So what do we got cooking here? I, for one, we've been playing the long side of stocks for quite a bit now. Basically we've got a head and shoulders reversal here. Once you take that out, you don't want to fight that. Boom, pull back to the mean, and we actually almost got up to 3 ATR, and now it is time for a break for a couple of reasons. First, stocks tend to top out on the 7th to the 9th of the month, give or take, and then bottom out the 19th or the 20th. And this has happened, again, give or take a day or two. This has happened like 11 out of the last 12 months. Well, today's August 9th, right? We got a sell signal. RAF has rolled over. The squeeze, which has propelled us higher, has now lost momentum. So at the very least, I am looking for a reversion back to the mean as a first target, and things could get a little frothy from there. But make no mistake, I am not at this point looking for the markets to crater or crash. I know everything's ugly. The 10-2's inverted and hasn't been this low since 2000. Okay, I get it. But remember, the market also is very, very good about pricing things in like 6 months from today. And so it is trying to balance out how many rate hikes are there going to be versus how bad is a recession going to be. And if the recession is bad enough that it's going to cause the government to go back to quantitative easing, which, by the way, it's already priced to do in the Fed funds in March, that's good for stocks. So long story short is, in this kind of a market, don't trade the headlines. Just look at the price action. Look at the stuff that has worked over time. And what has worked over time is that between the 7th, 8th, or 9th of every month, the markets tend to top out and at least revert back to the mean. On the 19th and 20th, they tend to bottom out and rally. And that's been true all throughout this year. Right? This was the 7th or 8th right here when it topped, and then when it bottomed, it was, the list goes on and on. So keep that in mind. So that's on the Qs. Same thing could be said for the spiders. What about any special cases or anything like that that's out there right now? And I would just say that in this kind of environment, keep an eye on, first of all, you want to keep an eye on the big stocks. Okay, so Apple's a big stock here. Is it falling apart? No. This market is not going to fall apart if Apple's holding steady, and it could certainly revert back to the mean. So we want to kind of keep an eye on things like that. And then what about AMC? Isn't that in the news again? Yeah, this is a trading stock. This is somebody bought 2750 and they're going to have to live with that for the rest of their life, kind of a thing. So, if you understand that it's a trading stock, that's fine. And then last but not least, just taking a quick look at UNH. So there's a very few handful of stocks out there that I like on the long side from a swing perspective, meaning I feel comfortable holding. UNH is one of them. So this one we picked up on the pullback to the 21. We got out of it today, and I certainly would want to buy any pullback. I'd love to buy a pullback. Could we get to -1 ATR? And then hook this below here and turn back higher again, about mid-level buy? That would be fantastic, and that's what I'm looking for there. All right. Anyway, got a lot to cover about the dollar, bonds, interest rates, the VIX, and all that in the premium video. So let me wrap this up. We'll get started on that. You guys have a fantastic rest of the day, and we'll see you at the next update.
Hey, John here with Simpler Trading. Thanks for watching. If you enjoyed this video, comment down below and let us know what topic you want to see us cover next. Also, be sure to subscribe and click the bell icon so you can get notified when we release new videos. And if you want to watch us trade in real time using our own money, go to simplertrading.com and learn how to sign up. Good trading, and we'll see you next time.